Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHERVON interim report. CHERVON Holdings Limited offers a diverse range of businesses and services across various segments. The company's key offerings include power tools, manufacturing, testing, sale, and after-sale servicing of power tools for consumer, professional, and industrial users, outdoor power equipment, outdoor tools and accessories for professional and mass-market users, related products, gardening tools and do-it-yourself products, brand names, Flex, Devon, Ego, SKIL, Extron, and ODM, original design manufacturer, brands, investment holding activities, investment holding and financial management services, trading services, trading of parts and components to home appliances, business design and operation services, design, operation, and sale of do-it-yourself products. Chevron stock price increase. A year of growth and optimism. In the past year, Chevron Corporation, CVX, has seen its stock price rise by 5.42%, with some quarters experiencing even higher growth rates. Several key announcements and developments have contributed to this positive performance. A significant factor in Chevron's increased stock price is its commitment to shareholder returns. The company returned a record $27 billion cash to shareholders in 2024, continuing its trend of returning cash through both dividends and share repurchases. This focus on shareholder value has supported investor confidence. Chevron's operational efficiency and growth have also been major contributors to its stock price increase. The company reported record production levels in Q4 2024 and Q2 2025, driven by significant growth in the Permian Basin and the full-year contribution from the PDC Energy, Inc. acquisition. The strategic acquisition of Hess Corporation in July 2025 was another key milestone for Chevron. This $55 billion deal is expected to enhance the company's position as a global energy leader by adding world-class resources, particularly access to Guyana's low-cost oil assets. Analyst endorsements and price target increases have also played a role in Chevron's stock price growth. Several analysts maintained buy or overweight ratings and raised price targets for Chevron throughout the year, reflecting a bullish outlook on the company's prospects. Overall, Chevron's stock price increase can be attributed to its commitment to shareholder returns, operational efficiency and growth, strategic acquisitions, analyst endorsements, and positive market sentiment in the oil and gas sector. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers: user-centric innovation and introduction of new products showcasing advanced technology. Strong brand portfolio with global recognition and multi-channel sales network. Revenue scale growth, business expansion across own branded products, and favorable exchange rates. Revenue decline drivers: weakness in the China market and decline in OEM business. Decrease in sales generated by reportable segments, particularly in power tools. Net income and profit margins. A shift in favor. The company's net income has experienced a significant surge of 54.6%, rising from $61,619 to $95,271. This substantial increase can be attributed to several key factors. Firstly, the growth in revenue scale and business expansion across own-branded products have contributed substantially to this rise. Additionally, the introduction of Ego products has led to a strong gross profit margin, further boosting net income. Favorable exchange rates and a one-time non-recurring gain from the disposal of CHERVON China Investment Co., Limited have also played a role in this increase. As a result, the company's net income as a percentage of revenue has risen by 2.8 percentage points to approximately 10.4%. The profit margins have also seen an improvement, with gross profit margin increasing by 40 basis points from 32.9% to 33.3%. This upward trend indicates a more efficient operation and better cost management within the company. Overall, these changes reflect a positive shift in the company's financial performance, driven by strategic business decisions and favorable external factors. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the financial summary, the net cash generated from operating activities is a positive $256,652. This suggests that the company is successfully managing its day-to-day expenses and generating sufficient revenue to produce a surplus of cash. As a result, it can be concluded that the company is indeed generating positive operating cash flow. The company's financial performance varied across different segments and regions. Notably, outdoor power equipment and total segment showed significant growth, with revenue increasing by 22.7% and 11.8%, respectively, and gross profit rising by 24.9% and 13%. In contrast, outdoor power tools and others segment experienced declines, with revenue decreasing by 2.3% and 60.4%, and gross profit falling by 8.5% and 62.6%. Management's outlook on company strategy. The company is shifting its focus towards innovation, particularly in lithium-ion battery technology. To achieve this, production will be accelerated at Vietnam facilities and pricing strategies refined to address external pressures. Additionally, investments will be made in growth areas such as talent development, global manufacturing, and research and development. The company aims to maintain a stable financial position by regularly reviewing funding and maintaining strong liquidity levels. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. Notably, the company paid out significant dividends in 2024, $18,091, and 2025, $118,717, demonstrating its commitment to rewarding investors. Additionally, the company has also engaged in share repurchases, with notable transactions occurring in 2024, $4,049, and a smaller transaction in 2025, $256. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns regarding inventory buildup and supply chain disruption. A production slowdown caused by China-US tariff policies led to an improvement in inventory turnover days, but this was largely due to weaker business performance rather than effective management. Furthermore, a decrease in finished goods and semi-finished goods, alongside an increase in raw materials, suggests potential issues with inventory management and supply chain planning. Ongoing challenges from external pressures, such as China-US tariff tensions, exacerbate these concerns, indicating that the company may be vulnerable to disruptions in its supply chain. That concludes the financial summary for CHERVON. Feel free to comment below, and I will be happy to answer them when possible.